Good evening, ladies and gentlemen, all our attendees. On behalf of India FinTech Forum, I, Rini Kumar, welcome you all for the online session on the future of KYC in Indian financial sector and expected regulatory changes. So, just few points to note here. The attendees can enter their name and ask their questions on the Ask a Question panel. And Mr. Dhruv, who is the moderator, will be taking up the questions from the panel to our speakers. This webinar is being recorded and it will be published on YouTube channel of India FinTech Forum. And this session is being supported by ADVANCE.AI. So they have some free gifts for the businesses as well as individuals as a token of thank you. So on this speakers, we have Mr. Amit Ranjan, who is the architect at National Digital Office, National eGovernance Division, Ministry of IT, Government of India. We have Mr. Ravi Madavaram, who is the Director of AI Commercialization at ADVANCE.AI. We have Mr. Jitendra Gupta, who is the founder and CEO of Jupiter. He is also on the advisory committee of India FinTech Forum. We have Mr. Pushpendra Sharma, Head of Compliance at RBL. And today's moderator is Mr. Dhruv Chawla, who is partner at PwC. So with that, I request Mr. Ravi to share his presentation and start with the session.
Okay, thank you, Rini. Give me a second, let me get my screen up. So you can see my screen?
Yes.
Okay. You can hear my voice also, right? My voice is audible?
Yes.
Okay.
Yes.
Thank you, Rini. Thank you for the opportunity and for all the people who are watching it. This is not an ideal way of interacting with you all, sitting in a room and talking to the computer. So I'll try to keep it as much as entertaining as possible. I can't be really, I can't promise you, but I'll try. Okay. The topic for today, what we want to discuss is basically about KYC and the different regulatory changes. I mean, what some of the challenges that we see, etc. Yeah. So ADVANCE.AI is a company from Singapore. We are based in Singapore. We have an office in Bangalore. We were planning to start an office in Mumbai and Delhi, unfortunately, just before the COVID. And now the location of the office doesn't seem to matter. We also have presence in other countries like Indonesia, Vietnam, Philippines, and of course, few other countries. We are a well-funded startup, one of the top 10 funded startups in Southeast Asia. We have about 140 million funding. And we are at the moment serving about 500 enterprise customers. Some of them large banks like Standard Chartered and some large Indian fintechs like Faircent and Cashy. And global players like Home Credit, and quite a few other customers. We also have a lot of products around KYC. We have about 50 plus products. Again, for each country, we have different catalog of products. Yeah. So in terms of products, we have three major buckets of products. The first one being AI solutions. Tech is hand in hand with the kind of regulatory changes that happen in any country. So AI for the last 3-4 years has been the buzzword in the KYC circles. So we do serve the KYC segment with our AI solutions. We also have our own proprietary databases for risk management, for fraud, as well as loan approvals and underwriting. We also provide a bank statement analyzer for income verification. And we bundle all of this together into a eKYC module where you can take all the products together, as well as we launched video KYC in RBI allowed this in January, right? Now we've started, I mean, in 2015, we are a fairly young company, 5 years ago, but we have seen tremendous growth. We also have a lot of ambition in terms of we are one of the we are one of the consortium partners for applying a digital bank license in Singapore. We would be exploring similar things in other countries as well. And as I just mentioned, we have had quite a bit of growth, and that has changed in the last 2 months. Again, I do not want to. This is not surprising, but I did want to put some numbers to the kind of impact that COVID has had. So the red line here that is shown here is a regional kind of trend, and green is for India. So as you can see, the kind of fall and the kind of timing has been across all the regions that we have presented, and India uh, a, is not an exception, right? And we have seen about 75% fall in new loan applications in the last 2 months actually, since the beginning of April. So since the first lockdown that was announced in 25 March, we have seen a consistent fall. And the good news is in the last 3 weeks, since the beginning of May, we have seen a kind of tapering of the fall. It has been a little stable. And thankfully for the last 1 week, I've seen a bounce back, at least in the Indian market. So it does look promising. A lot of it attributed towards the policies of the fiscal economic stimulus that was announced a week ago, right? Again, we have done multiple projections around this. When the economy is bound to come back, based on our projection, there are quite a few scenarios that we have tested, and majority of us agree that it's not going to be a straightforward recovery. It's not going to be a shock in the market and we go back to business in the next 2-3 months. It's going to be something that is going to be here, and our best projections suggest that is going to be a Q1 2021 kind of a recovery. What we mean by that is by Q1 2021, we expect the new loan applications to come back to pre-COVID numbers, and this is going to be quite wavy and quite turbulent period going forward. Again, there are other scenarios where it could be worse, but we do not believe that it's going to be worse than what we are at this time. What we mean is we are probably at the bottom of the scenario. Now, the RBI and SEBI have been changing some of the regulations. One of them has been the video KYC. Right? What COVID does is basically puts a lot of pressure on the people to adopt these new solutions. For people who are not familiar with KYC, or this is the process that I'm outlining here is a fairly skewed process towards fintechs. Majority of the banks still have traditional processes. So this process is a little skewed towards fintech, and this is something this is a standard process that we suggest to our customers. So this has few elements. Let me give at least the highlights of the key elements. The first one being the OCR technology, where a customer uploads their ID card, and the AI technology scans the ID card and provides the details. The second one is the liveness detection, where you're trying to identify whether the customer is a live person or not. He is not uploading a gallery picture, or he's not uploading a video. So you're trying to identify that the person is alive and he is the person applying. So once you have done the liveness detection, you've identified the customer and you have the ID card. This comparison is essentially comparing between ID card and the liveness face that you have received. Once you lock these three products, you can approve the customer. But typically, majority of the customers prefer to do another step, which is the ID verification. And this ID verification is where you're trying to check with the central database to check whether the ID is valid or not, has been a significant challenge for the last 4-5 years. Before we had the eKYC, you could do with Aadhaar, but now the non-banks are not able to do that process. And the traditional process that most of the non-banks are following are offline KYC, where the customer is redirected to the other website, and then you, using OTP, you get your details and pass back to the entity that you are interacting with. Now, one of the key challenges that we have had here is that the server uptime of Aadhaar or UID.ai has not been consistent. uptime as well as the response time has not been consistent. The KYC process has not been smooth, and this problem has existed for the last 7-8 months. And I do believe that this is not even a regulatory problem. This is the infrastructure problem, and this is something I think we should definitely address. Given that COVID, and it's not possible that a lot of customers are going to go to the bank. So this is definitely something that we should uh, fix. And of course, I mean, a lot of customers do use other ID cards like PAN and passport, but the kind of coverage that Aadhaar has, and the kind of because it also enables us to do a proof of identity as well as proof of address, which PAN does not allow. It is important that we have a workable solution for Aadhaar, which is consistent as well as reliable, right? The second part is in terms of technology. The technology has been moving much faster than the adoption by the traditional players. So of course, when you look at Aadhaar, the traditional system captures fingerprint, iris, and OTP. It does have face, and UIDI a year ago allowed a face-based authentication. Now, majority of the players that we have on our system use a OTP-based authentication. Now, OTP has its own problems. One of the personal examples that I have is I had a fairly large bank account for the last 14 years. And 5 years ago, lost the phone number, I lost my SIM card, and the telco refused to replace the SIM card because of KYC for the telco. And I ended up not having access to that account because to change the mobile number, I had to go to the home branch, and the home branch was in a city where I studied. And so for the last 5 years, I could not use it, and I had to go to specifically to that city after a lot of years and then get access to it. Again, I mean, I like the bank, I like the account, I could not use it because a simple rule that stops me from doing it. So a biometric OTP is the only one which is non-biometric. A biometric authentication is generally always with me. The fingerprint is always with me. My eye is always with me. Thank you. Hopefully it is. And the face is also with me. And of all the three biometric technologies, face is very, very easy to access. Anybody who has a phone in their hand can actually do a face-based authentication. Fingerprint is also very popular, but not all phones do support fingerprint. And if you can see the accuracies, as of now, the kind of accuracies that we are able to hit is about 99.83, even with complicated faces like ID. For benchmark, fingerprint does about 99.99%, and the face authentication is not very, very fast. So I do believe a face-based authentication is something that we should definitely look towards, and the kind of accuracy that we are seeing in the market is definitely something that will have a huge impact. The third one that I want to talk about is the video KYC. And for people who are, again, not familiar with the video KYC technology, the traditional process of onboarding a customer has been a physical verification where you go to the bank or you go to the FinTech vendor and then you do a physical verification. What the video KYC regulation allows is on a live call, you have an employee of the bank or the FinTech on the one side and the customer on the other side. And during the live call, you do a few checks like PAN check, Aadhaar verification. You do the geotagging of the customer. You capture the live picture of the customer. You do a few checks and you can complete the onboarding process. One of the restrictions that I see in this regulation at this point is that the call needs to be triggered from the domain of the registered entity. Now, the KYC is a great opportunity for a lot of players. The restriction of having to trigger the call from the domain makes it that the deployment of video KYC needs to be on-premise, and on-premise deployments are fraught with time constraints. It takes time to deploy them, and they are skewed towards larger players. What I mean by that is majority of the smaller players do not have on-premise deployment, and this requirement makes the playing field a little skewed towards the larger players. And while we are trying to using stimulus and stuff, we are trying to get to MSME market, and fintechs are the right route to go to the market. And because of COVID and everything, this restriction puts a lot of stress onto the smaller players. So that's pretty much it from me. So three things. One is KYC. Would love to see other websites to be more stable and reliable based technology. The third one being video KYC. If it is a SaaS based, or even even a reprieve for the next 6 months until the COVID comes back up, would be a great thing for the fintech market. So thanks for listening to me. And if you have questions, you can, on the top right on your screen, you can see a box where you can type your questions. If you want to try some of our products, you can. You have some buttons there where you can try. You can also provide us feedback. Thank you. Over to you, Rini and Dhruv.
Thank you, Ravi. Thank you for your wonderful presentation. I now invite Mr. Dhruv Chawla to take over the conversation and the discussion on future of KYC.
Thank you, Rini, and thank you, Ravi, for those views on how things are changing. I first want to thank ADVANCE.AI and FinTech Forum for setting this webinar. It's pretty relevant. Yes, like Ravi said, it's not ideal. Usually we are sitting face to face, but since we are talking about innovation, we're talking about technology. I guess we are adopting new ways of connecting, sharing our thoughts. Rini has already introduced the panel, so in the interest of time, I'm not going to go through each and everybody who's on the panel. Housekeeping, I think you've been advised by Rini to type in your questions on the portal. I have already gone through a few of them, and there are a lot. So we will try to cover as many as we can, and if we can't, then I think we will respond to you individually as far as possible. So just to set the context, I think the way the world is changing, and especially in India, we've seen a lot of innovation. We've seen a lot of innovative products, whether it's the government, which is focusing on sort of the digital footprint, Digital India initiative, whether it's the fintechs, and to a certain extent the regulators also. They are seeing that there is credence to this innovation. Customer service has become important. Customers' expectations are changing. But at the same time, the innovation brings in certain challenges. The regulators have that challenge to keep up with the innovative products that a couple of our friends on the panel actually are developing and taking out in the market. So we will discuss, and we will see how the conversation shapes up. But there are two important factors that we would want to cover, and that's the way we sort of decided to proceed on this. Just to start with, I would want to ask Amit to start with this question, but this question is for all the panelists. In their mind, and let's keep the crisis of the COVID piece out of it for now. What is that paradigm shift that you're going to aspire for from a KYC perspective? It includes all the technology innovations, it includes all the customer expectations, new products. So where would you want sort of the new paradigm of KYC to land if everything is normal?
Right. Thanks, Dhruv. Great to be part of this panel. I think this is very timely given the fact that everything digital is on an uptick with what we are seeing in the world around us. And I'll just start with a little bit of a couple of points about DigiLocker and how that fits into the KYC thing. And also to kind of address one of the questions that Dhruv, you were asking earlier, is that DigiLocker's kind of adoption, especially in fintech and the financial space, has been somewhat of a laggard, and I would accept that criticism. That is true. So this project has been around since 2015, and now we have close to almost 4 billion records on the platform, and about 40 million people have signed up for the application. And DigiLocker actually has been pretty successful so far with regard to some of the more B2C kind of use cases. So for example, if you're entering an airport, or if you're going on to the railways, or if you are driving around and you want to show your digital license and your DL and RC, those are very popular use cases, and they're like lakhs and millions of people who are using it every day. And that was possible because, once we created the application, one of the first things we did was the IT Act of India was amended. The IT Act of India back in 2017 says that any document coming from this system is considered at par with the original documents that were issued to you by the government department. So that kind of establishes the legal sanction and the validity for the platform. And but one of the areas where we've not been very as successful, or as we hadn't had as fast adoption, is essentially the financial space. And the reason for that has been that it has taken us some time to get the requisite approvals and the notifications from the sectoral regulators. So we went to the Ministry of Finance a couple of years back, and they actually looked at the solution, they understood what it means, and then they finally notified DigiLocker as in the PMLA Act. And once it was kind of notified in the PMLA Act, then subsequently RBI has notified, and SEBI has recently notified. So that kind of, from our perspective, it kind of completes the loop, and it kind of makes the platform relevant, not just for the B2C parts, but also for fintechs, for financial industry, for payment companies, for digital lenders, for banks, NBFCs, and so on. And so we're seeing a very quick adoption on that front now, especially after COVID. A lot of people reaching out to us. I think we are already, we're doing almost close to 8 to 10 lakh document transactions every month. By document transactions, I mean that, a document, so we define a document transaction as when data is coming in from an original source, and it has been used by a requester for a certain use case. So that number has grown like almost 10x over the last 6 months or so. So in many ways, I would say that this is probably for the first time that this platform is now ready for prime time as far as fintech and the financial space is concerned, and it's taken us some time to get here. Your question about the where would we like to see this go, especially in view of the future developments in KYC. So one of the things that I would like to share here with the audience, and this is still on the drawing board, very early stages, so don't take it as an official word. But the fact that we have a platform like DigiLocker now, I think it is going to enable many new capabilities, and I'll explain what I mean by that. So DigiLocker is essentially kind of, it sits at the hub or at the confluence of various data flows and API endpoints and API feeds. What it is doing is that, think of it as a gateway which is lying in between various data issuers. And in many ways, we've actually tried to sometimes look at what are the parallels to DigiLocker in the financial space or in the other spaces. And the closest that we can think of is actually, if you look at what NPCI does within the RBI system, where NPCI is essentially an exchange for various payment systems. So if you kind of extend that logic and you kind of think of what would an exchange for similar data flows and documents look like, I think that is what DigiLocker is slowly turning it out to be. And this is the recommendation we've actually made to the ministry. So how is this relevant to the new KYC that we are discussing? Is that because we are sitting at this confluence, we are sitting at this hub, I think we are seeing these different API feeds coming to us from various sources, and it is possible to conjure up completely new products, completely new experiences, and in this particular case, maybe newer ways of doing KYC that was not thought possible earlier. So maybe there is a possibility to kind of look at KYC methods outside of the Aadhaar world. We are doing mobile authentication. We have access to the PAN data. We have access to the DL data. I think we should very soon have access to the voter ID card and the passport that Pushpendra was mentioning. So once you have access to all of these, you can imagine a different concept of KYC as well. Think of a more disaggregated, it's kind of coming from different sources, and it's a federated way of doing KYC. I think we can see the possibilities of that kind of system emerging as well. And as I said, this is still very early days. It's not as if we started working on it, we are kind of going through the technical and the product feasibility of that. And once we kind of, feel that that is, it's doable from that point of view, then we obviously will look at the legal aspect as well. But the very fact that now you have a platform like DigiLocker, which is sitting at the confluence of these API flows, I think it is going to enable, new experiences, new products, new regulatory processes that may not have been possible earlier.
Thanks, Amit. Let's switch gears and maybe Jitendra, who is probably at the cusp of like a new digital bank. Jitendra, what are your thoughts on this?
So, Dhruv, if you look at it, the banking per se, I think because of this whole COVID situation, this is like super impacted right now in terms of people not going to branches anymore. And I think, in fact, people are questioning that, do I really need the branch? And I was just checking from a couple of banks where they're saying that the account opening from the branches have dropped almost by 99% or so. So banks have no choices but to move to the digital account opening process. So the way in 2016 we had this demonetization as a thing where people were forced to make digital transaction. I think it's the same kind of moment where I'm seeing that people are forced to download the mobile banking app of the bank or the internet banking website usage. So clearly this is a new normal which is happening. What that also means is, I think in my view, even the regulator will be forced to think that the license condition which says that you got to open so many branches, the customer has to be in the vicinity of your branch to be your bank customer officially signed up. I think all those assumptions will be challenged now. So we'll see a lot of things happening. From that perspective, I think the video KYC for sure was it was just a coincidental, but it was a sort of happened pretty much in time. And now we are seeing that banks are rolling out the same. Otherwise, they would have struggled if this video KYC as a guideline had not come in 3 months back. They would have struggled because I think well, Amit mentioned about DigiLocker, but I still haven't seen any bank proactively using this as a DigiLocker as a facility. So I think it will be very, very interesting to see how we can use it. And in fact, my product team is specifically exploring all the options to leverage DigiLocker because that the process, at least I personally tested, is very, very smooth of fetching the document and sort of reducing the process around time taken of doing KYC. Your next question, which you asked me, that what might happen from a regulatory standpoint. So I think I'm sort of considering my answers are more than KYC. I personally see that while yes, the banks are going through a trouble phase in terms of moratorium and delinquencies and potential losses which might happen because of the income losses and all. But I personally feel that in 12 to 18 months, RBI might actually feel the need of issuing or carving out in existing licenses some sort of digital banking licenses, and we have seen that happening in like Taiwan, Singapore, Hong Kong, Australia, UK. So I sort of expect something happening on similar lines. There are various consultation papers which have already been in circulation by Finance Ministry and RBI. So I see the efforts being fast forwarded there.
All right. Thanks, Jitendra. Pushpendra, being a bank and then going through the transformation of being digital, what are your thoughts on how that journey has been, and where would you or where are you guys planning to be from a KYC perspective?
Thank you, Dhruv, and I'm glad to be on this panel. My thoughts on how KYC has evolved over the last year. I'm glad we are discussing this session and this topic today rather than doing this 1 year earlier. I think we are in a much better space as we speak today. Regulatory clarity has finally emerged. I think we have now come to a place where banks can go ahead and do investment in KYC because the clarity is finally there. So I think 2-3 things have happened over last 2 years, and particularly the pace has increased now with video KYC coming up in January. I think in the past 2 years, CKYC adoption really kickstarted the whole aggregation piece. So central KYC, I think the jury is still out whether it's finally useful or not, because a lot of upload of data has happened, but download of data and actual usage of CKYC information is still not has not picked up, because the onus of checking the consistency and correctness of documents is still on the banks. I think what has happened eventually is a lot of digital saving products launched last year on Aadhaar eKYC, one-time OTP solution, which required a full KYC 12 months down the line, has picked up. I think that was the hottest selling product on the liability side last year. This year, with video KYC coming in, I think there's a clear transition of that digital saving product getting into a full-fledged mode along with video KYC. So the rails were already there with the banks when they launched the digital saving product, which customers adopted on their mobile phones and opened a lot of accounts. But a feet-on-street effort was still required to do the full KYC. I think that gap is now got fulfilled with video KYC being available. So that is a big change now. As Jitendra mentioned, not many people would want to visit branches, or they anyways were not visiting branches, because the liability model in banking especially was that RMs had to reach out to customers. So finally, I think banks are trying to reach their customers on mobile phone. The other two things which not many people, observers have noticed, is the RBI circular finally allowed OKYC, as we call it, or the KYC method, where you input your Aadhaar number and the 4-digit PIN is shared. That is a valid KYC method now. So I think a lot of banks have invested in that product, and that product is also prevalent in industry. I think the gap there is about in-person verification of the customer. I think those challenges still remain. I think I must compliment RBI on what they have done on the video KYC bit, because it took them about 4 or 5 years to get it done. But I would rather compare RBI with SEBI on the in-person verification bit, where SEBI seemed to have done a much better job and allowed much more flexibility for in-person verification. SEBI doesn't mandate a in-person verification if Aadhaar information is used or DigiLocker information is used, whereas RBI still requires in-person verification even if the information from DigiLocker is fetched out. I'm personally a very big user of DigiLocker information, because it saves me from document handling. It is available on request on a tap of a button, and the range of services from state governments, especially, and central government, and how the whole range of documents which have are available on DigiLocker. Clearly, I think the next wave of change on digital KYC journeys is going to happen on the DigiLocker, because Aadhaar still has a challenge. Biometric KYC requires feet on street and a person to carry the device to the customer. OTP methods of Aadhaar has a challenge where a lot of customers have changed their mobile phones, and OTP and mobile phones are not updated on the Aadhaar database, and hence you are hampered to use the OKYC or eKYC methods. So there's a big chunk of non-Aadhaar documents which, if available on DigiLocker, and some of them are really available on tap. If the range of all those documents on DigiLocker is available, then it's just a matter of bank building APIs into their digital journeys on DigiLocker, and really sort of maximizing the use of DigiLocker environment for a non-Aadhaar based customer, because the challenges on Aadhaar regarding sharing of OTP or privacy or other things, and maybe the availability of mobile OTP or mobile being updated on Aadhaar, really warrants a alternate to be available. So I think those things are leading. It's a clear trend where paper-based KYC methods are giving away to electronic modes. I think RBI is stopping DSAs from being deployed in the KYC process, is also forcing banks to adopt digital means. But I think there are still some big challenges left in banking, especially. I think SEBI has liberalized a lot because they believe a bank account, a KYC bank account, will still be available on a mutual fund or the brokerage account. But RBI is little conservative still. I think there's some scope left for further fine-tuning their instructions. I think current account address and updation is still a big hurdle. I think it is the biggest hurdle, where they've only allowed current address to be declared on declaration basis for biometric Aadhaar and not for other methods. I think given our migrant population, and we are seeing a big chunk of what a migrant population looks like, and what impact does it have. I think there's a fair ask from industry that address on declaration should be allowed, because there are a lot of electronic ways on device binding, geotagging, live photo. I think that all those things can give away to the fact that current address proof, if not available through paper, can be captured through alternate means. I think those are my initial comments. If there are questions, I'll be happy to.
Yeah, thanks, Pushpendra. So let's switch gears, and just picking up from what all of you've commented. Is there, and I know globally also this has been tried, to create a utility that everybody can use. Maybe Amit, you want to come in over here, do you see, because I know Singapore has been trying and is trying to get to that. Do you think then having a utility which services the KYC needs is something that can happen? Amit, do you want to maybe start giving an opinion on that?
Yeah, I think, as Pushpendra is pointing out, I mean, it looks like a logical direction that will evolve. Because while, once eKYC was available and industry had taken to it, you could see a lot of the, seamless flows and all that had come in. But now, because there are clear restrictions on how eKYC can be used and who can use it, who cannot use that, I think, especially private sector needs to have solutions that really works for them at all times, in all situations, in all workflows. And I would say that, yeah, clearly that the writing is on the wall, that there is some kind of a system or a utility or a platform that will kind of, need to emerge. And I just wanted to comment on one point that Pushpendra made, and this was the RBI versus SEBI thing. And we've actually seen this thing even play out with respect to our platform, DigiLocker, is that while it is true that banks, NBFCs, digital lending companies, payment companies, they've been laggards as far as adopting DigiLocker is concerned. One segment or one sub-segment which has absolutely taken to it like fish takes to water is online brokerages, which come under SEBI. And and they've been doing it for the past 2 years. So the entire Zerodha, Edelweiss, ICICI, Angel Broking, almost the entire industry is kind of on DigiLocker. In fact, Zerodha has been using it for the past 2 years. And so you can see that it depends. Part of it also comes from how tightly the regulator is kind of holding on to some of maybe the new age requirements and how comfortable they are. And I think I personally also applaud SEBI for being far more forthcoming and more welcoming than maybe some of the other regulators.
Okay, Ravi, from a outside in perspective, how would you sort of design a utility like that so that it can actually service? Because we still do have a lot of different ways. It's still in-person is required for certain type of accounts. Not the whole financial services industry. I know we've been focused on sort of the banking side and more retail, but you've got NBFCs, you've got the mutual funds. Is there something which you can envision can service a majority from a KYC perspective, not other sort of regulatory requirements? Ravi, do we have Ravi?
Unmute myself. Okay, sorry.
Oh, sorry. Yeah.
Yeah, definitely. I mean, I don't know whether it's a fair ambition to have a single solution to all of it, because there is multiple regulated entities, being banks and BFC, fintechs, and even the general segment, as well as customer segment itself. So, for example, Singapore has something called SingPass, wherein the Singapore controls the login and credentials of it. So if the moment you log in using that credential, you can access any website from the government, from taxing to banking to everything. Everything is linked to one single door, so to say. Now, again, that depends on the segment, because Singapore is a small city where most of your segment is English speaking as well as tech savvy. I mean, no, I wouldn't say fully tech savvy, but a little bit. So there it is possible. Whereas in a country like India, I don't know whether one solution will fit all. I still think India still need to have few solutions. Again, that depends on different state governments, different segments, people talking different languages. All of this, I don't think that we will have something in the short term, one solution that will solve all of that. Again, I mean, I'm a firm believer of AI. I mean, I represent AI, right? I've been working on AI. So my hope is that AI will be able to slowly start stitching the things together, and eventually we'll have some solutions going forward. But I don't think I see that in the next few years now.
Okay. Jitendra, from your perspective, there are still certain, from a KYC perspective, requirements which a fully digital bank might not be able to sort of do, right? So what are your views on, if you have a fully digital bank, how far out is a fully digital, fully serviced bank from a customer's perspective?
So, so I think if you look at it, I'll take the examples of like what's happening in other parts of the world, which is, let's say, UK or Australia or US, where the processes are completely digitized. So you can actually generate your account in less than a minute, and it's a full account I'm talking about. It's not a limited KYC account. So while video KYC was attempted to do that in that direction, but there's still so much of friction involved in the video KYC about that video, the person scheduling it separately, and then the appointment, and then the person on the other side has to be available to check whether there's a real live person on the other side. Now, all of those capabilities can easily be detected by the fraud systems and the automated systems which are there. And I think that, so maybe it's a step to that, what RBI has come out with. So because this itself is a big step, as few of the guys here said. But I think the ideal state would be where there's no dependency on the bank person to do the KYC. The solution has to be like completely automated, way allowed to do that. And I think if that happens, then it's a real good experience.
Okay. I'm going to pick up a few threads on the questions from some of our audience. There are a lot of questions, very specific questions on the applicability and usability of video KYC, which I think we will answer, maybe respond to you on a one-to-one basis. But one question which, or a common thread is on, like I said, we've been focusing more on sort of B2C or retail side. What about, current accounts? So Pushpendra, I think you mentioned briefly on the current account thing. So do we see any progress around what we've seen on the B2C side on those type of accounts or services that institutions are providing? What would you like to sort of see over there?
Yeah, so from a compliance perspective, I think video KYC is available for all variants. I think this is the first week of video KYC, coming into picture. I think Kotak launched it last week, or maybe this week. I think the announcement came on Monday. A lot of other banks are I think will be going live in next week to 10 days. Almost everyone sort of were preparing or go live with similar tech partners, and so I think the initial push, as I said, will be for doing the digital savings account which banks were doing last year, and just completing the full KYC bit on those accounts initially. But from our perspective, we are clear that current accounts, B2B accounts, will also go on video KYC. It means that we have to do 4 video interactions and interviews of 4 signatories, if there are 4 signatories in a company. I think the document collection of on current account, because board resolution and the authority to transact the account still needs to come in hard paper. Companies may not have adopted e-sign that well, though I hear NSDL has about 100 plus tech partners who are available in market to give e-sign facilities. I think the adoption is very low at this moment. But if companies are able to provide board resolution through e-sign, and I don't know whether DigiLocker can hold that bit, but if it is not, because these are private companies, then e-sign adoption, if it picks up, then B2B case study cases can be fully onboarded on video KYC. That's my view.
Okay. Does anybody else wanted to comment?
Yeah, I just had a small point on
Sure.
the video KYC and the recent regulation. So I've actually seen a few examples of companies and startups and fintechs which have actually implemented the overall flow. And my sense is that, people are generally trying to play it safe. And there's, even in the current flow, there's a fair bit of redundancy that has been built in. There's proof of identity, there's proof of address, there's in-person verification. My sense is that 6 months or 12 months down the line, there might be a possibility to, even within the current system, there could be an opportunity to kind of simplify and reduce some of that redundancy, because I would love to learn from industry, what are the funnel drop-offs while you are, while people are actually taking this flow. I would imagine that, and I come from a product background, so I naturally think product. My suspicion would be that there'd be a fair bit of a funnel drop-off, simply because of the fact that it's a longish process. I've seen a few examples where right at the very onset, just to build expectancy, they say that this is a 20-minute process. So they're trying to prepare the user, saying, okay, you know what, this is going to take 20 minutes. I don't think even with video KYC it needs to be 20 minutes, honestly. So that's just one of the observations I've had.
Okay. Now coming to, let's talk a little bit about artificial intelligence and some of the use cases. Ravi, do you want to talk about some of the things that you're working on which may help alleviate some of these challenges or maybe solutions? I know in your introduction presentation, you were talking about sort of the current scenario. Can we get some view on what you are focused on for the next 12 to 18 months, or maybe even longer?
Actually, I mean, I will give you a broad overview of the AI journey. So, for example, technology impacts how people adopt. Yeah, for example, phone came in, phone banking comes up. You have a smartphone, you have an app, mobile app for the bank. So likewise, it's also important to understand what's happening on the tech side to see how it is going to play out. So the facial or the photo-based computer vision technology has been there for some time. So in 2015, 2012, 2013 is where the core technology like the ImageNet moments happened. And 2015, 2016 is when the initial start of adoption happened. So the last 2-3 years has been a market for computer vision related technologies. What I mean by that is face verification, face recognition, liveness detection. All these technologies are around the person's face, right? The latest developments in AI are happening towards the language along with the combining that with the photo technology. So you will see a lot of bots, collection robots, call bots that we are deploying in few markets, and NLP chatbots. Chatbots is a generic topic that has been talked for the last 2-3 years, but it is still not. It has not hit the dot yet. Whereas the computer vision technology, as I've shown there, accuracy, right? It's in the 99.8 kind of percentages. It's over. It's like the CAT percentiles that I can think of. Whereas NLP is not yet there, not to that extent of accuracy. So I do believe there will be a lot of language and face technologies as well as document verifications that will come in using AI. And these are the kind of products that are going to come up, and these are the kind of products that are going to be coming up from the startups. But I do want to see few relaxations from the regulation side, because at the moment for KYC, for the banks at least, there's two options, which is the eKYC to do digitally, to do eKYC as well as video KYC. For fintechs and smaller NBFCs, it is still a fairly human intensive process. I still think that this balance needs to be managed, and I think this was also one of the recommendations from last year's study done by the finance ministry.
Correct. And talking about balance, so let me come to Pushpendra. One challenge that a lot of the institutions have is how do they balance investment versus being compliant. So your thoughts on, Pushpendra, how your bank has taken that journey? What are some of the learnings specifically around compliance around the KYC and the various, the products that you're launching, and then doing that KYC and making sure that the bank is compliant vis-a-vis the investment that is required?
So see, I think the major investment went into the digital saving account, which we put in last year. I think it's a fact that a cost of KYC, depending on product to product, could range from 150 rupees to 1500 rupees, depending on what you're trying to sell. Now, VSIP or video KYC is, of course, very cheap. I think the cost of per unit KYC ranges, it's less than 10 rupees. And provided you are able to get hold of the customer, schedule the interview, 20-minute expectation, drop-offs, net connectivity, I think all those get into the costing aspect. It requires a bank officer necessarily to do the interview, followed by concurrent audit, then only account is activated. I think investment into video KYC is much cheaper to the physical feet on street kind of cost. What I would like to see is regulations amended to cover re-KYC also on video KYC. Currently, it's all about new account opening. I think there is a whole set of re-KYC effort which is banks are struggling. That's a big cost because branches keep on sending letters and customers don't respond. Banks don't gather the courage of blocking those accounts because it's directly affecting business, and they carry a compliance risk. I think this will quickly solve the re-KYC problem also. Other bit of relaxation which could come really, as I spoke about, is the current account address, current address confusion, which is still there. Because at one point, even in my own experience, I didn't had a proof by which I could have opened an account in the bank, because my driving license had a address of my hometown. Aadhaar address was of previous house. So I live in a rented house, and I only had a rent agreement to show, which was not a part of the acceptable list of documents. So India is an interesting country. It's a pretty large country. There are a lot of variations which are there. So I'm glad that we have now come down to few acceptable modes of documents, whether it's Aadhaar, output, or a DigiLocker output. But I think the whole chain. KYC has decisively moved to electronic documents. I think we make no mistake. Paper is passé. I think even paper, as we speak, is all scanned papers. So investments, I don't think it will be a problem. I think the cost of compliance, the problems we see on KYCs and really authenticating customer as the real customer who's transacting the bank. I think the whole debate on KYC will soon move from KYC correctness to fraud and other risk which we associate with a customer acceptance, because technology has done wonders for the KYC.
Okay, so on that, and there were a couple of questions around fraud and relying on AI. Let me start with Jitendra. How do you get comfort on having a machine do something that maybe a human was doing? And and at the same time, what do you think the regulators need to do to get the same comfort?
Frankly, well, I'm not the absolutely right person through, but I'll take an attempt basis what we've done in my previous stint, which was into credit business. So machines, if you look at it, are also the output of inputs by human, right? So from that perspective, I think the machines are being trained based on what data human has input, and the behavior which humans have seen, and basis that machine starts learning. Of course, machine has a capability to process large amount of variables as compared to humans, which at one point can process limited amount of variables and then see the patterns and the trend lines and all of that. So in our experience, for any machine to be effective, I think it needs to get trained over time, and it needs to get have fed a lot of data. So for any process, be it KYC or credit risk and all of that, I think this is a iterative process. Second, and completely taking away the human element, I'm still not sure whether that's possible based on my experience. Because the machines had to still fed new behavior data, had still fed any unique fraud which is happening. Like you look at it, like you must have heard of this Jamtara frauds and all. Now such kind of fraud may not happen in US, but if these kind of frauds are happening in India, the machines which are being made in US by the companies there, they're not being trained to handle such kind of frauds, right? So from that perspective, I think we still have a long way to go, and taking away the human element altogether, I'm not sure. Well, yes, you can keep taking away substantial part. I think that is possible. But 100%, I'm not sure on that. The machine do the job of 100% right.
So Amit, on the DigiLocker platform, how are you securing or ensuring the authenticity of the data, no fraudulent sort of access, providing comfort?
Yeah, a big ask for us. And actually, one of the things that we've realized is the name of the platform itself, because for some reason, the word locker has kind of crept into it. And this actually predates me even before I started working on this. because the moment people think of locker, their immediate connotation is bank wala locker. It's something to do with that. But yes, you're right. Obviously security and privacy is a big thing. So I would say it kind of starts with the design and the architecture itself. Is that the whole idea is that this is a federated system. You haven't created a single repository so we don't copy any of the data onto any repository. These are just API connections via authenticated, secure, encrypted tunnels that we have. It's just, one machine at the Ministry of IT, which is speaking to, machines which are spread out over different departments. It's not as if we are copying the data. So I would say that was part of the intentional part of the fundamental design itself. It's federated. You're not trying to replicate that data itself. So that's one. And then, whether it is, encryption, whether it is different methods of authentication, I think those checks have been built in. Recently in the app itself, we were earlier having, we just added another layer of authentication. It was earlier 2-layered, now it's 3-layered, 3-factored. And plus, I would say, honestly, there's a fair bit of, when you are in the government database, the data centers, they tend to kind of have many of these systems up and running, and they're quite, in my opinion, there's been a little bit of a revelation to me, honestly, that I personally feel that, the government data centers and all actually are quite well managed and they're quite safe. You might have certain leakages at some point in time on the front end applications, but the data itself is kind of, I've seen some of the processes and systems, they are actually quite robust. Okay. I've seen many more hacking incidents on the private side than I've seen actually on the government side. Incidents of the significance. So it is a big part of the daily job of the DigiLocker team to convince people. And by and large, we've been able to kind of manage that.
Okay, I know we've already hit 5 o'clock. If everybody is okay, I'll just take 5 more minutes because there are a lot of questions and I do want to sort of pick a couple of them.
I explain a little bit about the fraud, yeah.
Sure. Oh, go ahead.
Sorry, I did want to explain a little bit. As Jitendra pointed out, right? It is not, you can't really eliminate the humans from the process. But what we have seen, I mean, AI and machine learning, this is where it comes in, right, to identify the fraud. And we do have a lot of customers, some of our customers, some of the fintechs that we deal with, the kind of volumes that they deal is like one of the customers that we have issues 1 million loans a month. That's the kind of volume that a traditional bank would not have. And so in such a scenario, in such a process, you will not be able to do a human-centric process. So it depends on the bank, it depends on the segment, it depends on what you're doing. So when we had a chat with one of the customers in India, what he said is that I'm okay to let go of few fraudsters, but I don't want to keep a hole that it becomes a phenomenon. So what happens is if one customer figures out that this system works this way, and because the loans that I'm issuing are $20, $30, if he tells the whole village can bring down the system. But if he himself does it, I don't have a problem because I'm not even going to go to legal litigation because it's not, I mean, there is no economics of scale. So we do have a lot of products around this in terms of, like, for example, the basic checks, like, for example, if when a customer is coming in, does he have a WhatsApp account or not? It's very easy to check. From system point of view, using AI, you can check whether this guy has this mobile number that he is giving, does he use WhatsApp on it? Does he use Facebook on it? We also take picture, we can compare that to a huge database. So all these things are definitely possible from a tech standpoint. It definitely depends on the process of each of the banks or each of the companies and what's the kind of risk that they're taking. How strict do they want to be? All of this will define how you will go about doing it.
Okay.
So,
and a lot of the frauds, essentially, honestly, there's more fraud on the social engineering side than on these high-tech frauds. And Jitendra talked about Jamtara. Jamtara is just people calling up randomly on the phone and talking to them and trying to hoodwink them, right?
Yeah, and
okay.
Yeah, sure.
So Amit, there is one specific question. Actually, there are many specific questions on DigiLocker. I'm just going to pick one of them because I think we did discuss it a bit. So the question is, why not extend DigiLocker to company documents also from MCA for current account opening? I guess there's a lot of pain points around current account opening and sort of the requirements. Any insights you want to give? If that is something in the offering, or how do you want to address that?
Yeah, it's a very frequently requested, and I would say a very obvious extension of DigiLocker, because now we build the basic platform. The architecture, the flows, the application is already there. So this is requested a lot. I think frankly the thinking from the ministry side has been that you guys are working on this citizen concept, so let's try to do a good job with the citizens first before you extend it to the organizations. But my personal opinion is that you should see that very soon, because it's just a decision that the Ministry of IT has to take, and a lot of the heavy lifting already has been done. But I agree that it's a very common request that we get, and it would be a lot of work, additional extra work for us to actually roll it out.
All right, I'll take one more question, again very specific. This is actually from somebody in the NBFC industry, and whoever has, so Aadhaar OTP method is not applicable for NBFCs. Is there a other alternative that they can use?
Correct. So actually, as per regulation, only banks can use a Aadhaar KYC. NBFC cannot. So the few options that are available to them is, because video KYC is available, but as I pointed out, it's a structural problem of having it on-premise. If they do have an on-premise deployment, this is going to be relatively easy. The other option is offline KYC, where when a customer comes in, you redirect the customer to other website, and in the other website, he authenticates using his OTP, downloads the XML file, uploads that into the NBFC system, and then the NBFC has the details of Aadhaar. And which I also again pointed out that the other system is uptime is never there. Majority of the time, it would just go offline, and you will not be able to access the system. So this is all. These are the two processes that are available, but still some challenges.
All right, I think we are 10 minutes, almost 10 minutes over the time. We'll close it now. I know there are still a lot of questions. Like I said in the beginning, we will take a note of those. We will have the right experts sort of respond to you or connect with you, if that's okay. I want to thank everybody for participating. I want to thank the panelists for their very open, honest opinions. I know this is being recorded, so I don't think any one of us will be in trouble for saying something we will regret later. So thank you very much. Have a good weekend.
Thank you. Thank you so much.
Thanks a lot.
Thank you, everyone. Thank you.
Thank you, everyone. Thank you, Mr. Chawla, for moderating the session. Thank you all speakers, Mr. Pushpendra Sharma, Mr. Amit, Ranjan, Mr. Jitendra Gupta, and Mr. Ravi for being a part of this panel and sharing your insights. And I also thank everyone who has been a part of this wonderful discussion. And last but not the least, I thank ADVANCE.AI for supporting this online session. And we will be definitely sharing the questions with the speakers here, because there are a lot of questions that we see. I think the time could not be, the number of questions is more than what we can take at this point of time. Going forward, if you are interested in organizing any FinTech webinar or want to know more about the forum, please feel free to write to us at info@indiafintech.com. And thank you all. Stay safe and have a great weekend.
Thanks.
Thank you.
Thank you.